All right, welcome everyone to the first episode of season 3 of Finances with Ferg. We're finally here. This is going to be episode 1, Financial Basics 101. Good to see everybody on here. Really appreciate you showing up. And for those of you that brought guests, kudos to you because you have an opportunity to get entered into the draw. Now, we'll take a peek at how many guests actually came tonight. As you've seen in the emails, there are some rules to ensure that you qualify for the giveaways, but we'll take a peek at that after the session and go from there. But without further ado, this is, as I said, episode 1, Financial Basics 101, where we'll be talking a lot about budgeting, investing, and some stuff about debt restructuring and some debt strategies as well. But before we get into it, I do want to go over some housekeeping, just some reminders about the sessions, what you can expect, and what we'll be going over. So there will be 8 sessions listed here. Financial Basics 101, a lot of theory. 201, more practical. I actually want to take you guys through some examples that I've put together. Next week, Investing 101, the RRSP and TFSA, probably the 2 most important investing accounts here in Canada. Life insurance, because no financial plan is complete without life insurance, in my opinion. RESPs and RDSPs for kids. A little teaser on personal tax, as it is tax season. Figured I'd share some tips and tricks around that. And then estate planning as well. So what do you do with your money as you're entering retirement and potentially even later? Doing 1 session per week for 8 weeks, and then take a couple weeks off to change up the sessions, get some more people, etc., etc. For the first time, we will be putting the sessions on YouTube. So I will actually be recording them this season after a few requests have been sent my way to do so. For all of you that just want to hear me twice, or more realistically, the people that probably couldn't come the first time, they will be on YouTube for you after. If you want to check out some info or just really enjoy the sessions and think there might be some more repeatable stuff, I think there is some pretty good stuff out there that I got on Facebook and Instagram, so feel free to follow me there. The info will be put up here. Well, you can see it in the bottom left corner there, Financial Education Canada, but at the end of the slides here, you'll see some more places that you can follow me. After each session, I will be sending out a summary and a bit of a cheat sheet or some tools, things for you to use to help kind of where these sessions or help on the topic of these sessions. And of course, sharing and referrals are encouraged. Would love to get this thing as big as we possibly can. If I can get a TV series somewhere, that'd be ideal. If you guys can help me do that, that'd be great. They are best suited for Ontarians and Albertans just for time zone. I guess now that we're recording them, they're good for anybody, but these are relevant for all Canadians for the most part. Each province may differ a little bit here and there, but for the most part, the concepts will all carry true. And then giveaways. As I mentioned, there'll be gift cards and prizes for attendees who bring friends and family. Really want to get this thing growing, want to get as many people as we can coming to these shows. So, bit of an agenda. What are we going to be talking about? Well, the first one's who's this guy, right? Who is this guy? Why am I going to listen to him? The next one's going to be a little bit more general around becoming financially literate. We're going to talk about that. Some general tips on some things that you can do to help you become more financially literate. Then we're going to focus in a little bit, talk about budgeting, talk about debt, talk about some quick wins, some things you can do to help you become more financially literate without making too big of a change. And then at the end, if we have any questions, we can talk about that as well. Now, firstly, before we get into it, I want to introduce myself a little bit. Who's this guy, right? Where does he get off talking to me about money? Well, I am a licensed personal finance advisor since 2020 in the provinces of Ontario and Alberta. So I've been doing it for a few years now and really have been paying attention to personal finance of my own for probably 5 years prior to that, and just decided that, you know what, I want to share the wealth. I want to share the knowledge. I want to talk about this with people, help people if I can, and get more people in Canada financially literate. So the things that I can actually help with and the things that I talk about most just because I know them most investments, life insurance, retirement and estate planning, savings and investment planning, and a little bit of tax strategies. By no means am I an accountant, but have a few strategies that can help people with their personal taxes. I educate families and homeowners every day on basic financial concepts, including now on YouTube, and I've never been in debt or paid for my debt, kinda. And what I mean by that is for things like credit cards, things like student loans, yes, I have had debt, but I have structured my repayments in a way that I didn't actually end up paying for the debt. I just paid off that lump sum or that amount that I had borrowed. And I'll talk about that in a little bit. I am well on my way to financial freedom by 40. I'm pretty proud of this, and I've got a good pace going. And you know what? If I can do it, why not share the love and see if somebody else could do it too? So I'm hoping that some of these lessons will help people get on the right track as well. And then honestly, I think I'm just more fun than the average finance guy. You can check me out on some of my social media here. I've got Facebook, TikTok, and Instagram. Not gonna lie, I am much more on Instagram than the other two. Why? Just because I haven't figured out TikTok, and you know what? I only have time for so many. So I'm only on Instagram really now, but I do have pages, and I'm slowly but surely trying to use them more. But let's switch gears and let's actually get into the content here and talk about some concepts around becoming financially literate. All right, like any good session, you got to start with a definition. What is financial literacy? All right, well, it is the ability to use knowledge and skills to manage financial resources effectively. Okay, now this can be broken down into 5 key components. All right, and I'm going to kind of highlight what these are here. The first one being earn. And what this really comes down to is understanding your paycheck, right? Like understand what deductions are coming off, understand what money's coming in, how much tax is being taken off your paycheck. Just make sure you know what's going on there. Okay. The second concept is going to be around spend, right? How is the money leaving your pocket? How is the money leaving your bank account? And this comes down to creating a personal budget. Now, I will go into more detail around budgets specifically in a little bit, but I want you to change your mindset from thinking of a budget as something restrictive, not allowing you to spend, not allowing you to do what you want. And I want you to start thinking of a budget more in the sense of tracking, right? Just because you have a budget doesn't mean you're not spending money. What it means is you're just paying attention to what you're spending it on, when, and where. Okay, I want you to start thinking that way when it comes to budgets. Save, right? What this can come down to is determining your financial goals. Making a plan, sticking to it, and working towards something so that on those tougher days, on the days where it is a little bit harder to save, it is a little bit harder to maybe not buy that thing you wanted, you know you've got a bigger goal in mind, and that's what you're working towards. All right. The fourth one, second last, is borrow, right? Understand how credit cards work. Understand how loans and credit scores work. Get yourself a great credit card. Credit is good, right? Now, I do know that people can get out of hand with credit cards. People can get out of hands with credit and might not use it in the best way possible, but if you can properly, or if you can understand how to properly use credit to your advantage, it can be a very, very, very powerful tool. And last but not least, protect. Okay, you've done the first 4. You got a great plan. You got a great budget. Your savings are growing. Your investments are growing. Inspect, right? Every couple months, every few weeks, whatever cadence works for you, go back and take a look and make sure everything's going well. And then importantly as well, insure. Right? Insure, buy an insurance package, buy protection, basically, so that should something happen to you, your loved ones aren't left out in the cold. Let's say it's you get hurt, right? But you can't work. Insure yourself. Critical illness, disability. You are the best asset you have for making money. If somehow that gets taken away, you're kind of stuck. So make sure, along with inspecting, you're insuring so that you don't need to dip into your savings, you don't need to dip into your investments. You will be covered every step of the way. Okay. Now let's talk about some general tips for financial fitness. And yes, I know this picture is perfect. How did he find it? Really lucky Google search. I'm not gonna lie. But let's talk about some general tips for financial fitness. First thing I always recommend for people to do, because again, I want to keep this as easy as possible, especially to start. Budget time on a regular basis to pay attention to your finances, right? Schedule a little bit of time, maybe on Sunday nights for 30 minutes, or every 2 weeks, or whatever works for you, just to start taking a look at your finances. Hey, what was my spending like over the last 30 days? Hey, where did I do something good and save some money here and there? Where did I have a couple days where I didn't save money, or where I didn't spend money, or when I didn't save money? You want to see both things, right? But budget some time, okay? Put some time aside to do these things. And again, like I'd said previously, start small and start with the basics, right? You don't need to try to move a mountain to start getting financially literate and getting on top of your finances. Start with the small things and the basics. What's the most basic thing? Just track. Pay attention to what you're spending and how you're spending it. Okay? Here's a big one. Don't just do what everyone else is doing, right? Hopefully you'll have started thinking about creating a budget. Hopefully you'll have started thinking about creating some financial goals and creating a plan. Stick to your plan, right? Stay in your lane, put on your blinders, and keep doing you. All right, if you've got a solid plan, a solid budget, and some solid goals, it won't matter that everyone else is out there buying NFTs. It won't matter that everybody else is out there buying crypto, right? You got to do what's right for you. Stick to it, okay? Celebrate the small wins, right? Becoming financially literate and staying on top of your finances isn't about saving every penny and never spending it again. No, it's not like that at all. I want you guys to feel good about this. I want you to feel empowered about your finances, and a great way to do that is to celebrate along the way, right? Maybe you make a minor change that you would have not normally done unless you started paying attention to your finances. You make that change, it works for a week, go out, have a nice dinner, right? Treat yourself a little bit. Now, don't go crazy with this, because then you'll just potentially throw your plan or your budget or your goals out the window. But you definitely got to celebrate the small wins along the way. Okay, check your ego, right? This is a big one that people don't think of. Don't be afraid to say no to certain events. Don't be afraid to say no to certain things that you might need to spend money on. Right? Like, don't worry what everyone else is thinking. Don't worry about anyone else but you and your family. You got to check your ego and make sure you're doing what's right for you. You're probably going to hear me say this a lot. Track and reassess. Right? If you've got something in place, I want you guys to keep paying attention to it. Every couple weeks, every couple months, go back, look, did I do what I had set out to do? Have I been following my plan? Have I been keeping my spending in check? Because if you don't track, how do you know? Right? And then with the reassess, you go back and you make the proper changes. You don't go back. You go back and you see what happened, and then moving forward, you make the proper changes, right? The point here is you want to create a plan, you want to create a roadmap and stay on it as much as you possibly can. If you never look back to see where you're coming from, to see what you've done, how do you know if you're still on the right path? So you got to track, you got to reassess, and then ask for help, right? If you've got a friend or a family member that's already pretty good at this, if you know a professional out there that already knows, well, I hope they know they're a professional, but if you've got a professional out there, feel free to ask them for help, right? A lot of people can help you with budgeting and can help you at the start at no cost to you. Friends and family, we really hope it's at no cost to you, but ask for help if you really need it, because at the end of the day, you'll be very, very happy that you did. Let's switch gears here and talk a little bit about budgeting. Okay, and I mentioned this at the beginning, and I want us to, again, change our mindset about budgeting. It's kind of like this budget is a 6-letter word that people don't like, apparently, but I want us to change that. I want you to start thinking about budgeting like tracking and not restricting, kind of like a diet, right? A diet can be thought of in 2 ways as well. Oh, I'm going on a diet, right? People are going to think, oh, this person's restricting their calories. They're restricting what they eat. Or you can say diet like this. Oh, well, my diet does that, right? Or my diet last week was actually really great, right? It doesn't mean I was restrictive. It means what I was putting in my body. And I've been tracking and I've been paying attention. It's the same thing with a budget, okay? I want you guys to start using a budget as a tracking tool, not necessarily a restrictive tool. Now, if it needs to be restrictive, that's one thing. But for most of us, I think we just need to get started with tracking, and we'll end up getting on the right path. How to start with a budget and how to get on that right path, or at least put the first foot forward, I recommend pulling 6 months of spending, right? So look at your debit card statements, look at your bank statements, look at your credit card statements. Go back 6 months and just look at it. Understand where you've been spending money. Understand what you're always spending money on. Understand where you splurge and when. I guarantee you're going to find some things that you can save some money on instantly. How many times do we sign up for a free trial, forget about it, and then we get charged 3, 4, 5 months for it? That happens all the time. It happens to me. It happens to me all the time, right? But that's why we got to go back and pull the spend. That's why we got to go back and track so we can catch these things. Okay? Now, in this kind of tracking and going back and pulling of the 6 months, I want you to start by writing down the constants along with the price. And what I mean by constants is like the stuff that you're going to spend money on every single month. Rent, mortgage, car insurance, maybe cell phone bill. The ones where the price doesn't change and it's every single month. I want you to start by writing those down. Then the next thing I want you to write down is your needs versus your wants. Okay, and now the needs would be the ones that, again, are there every single month, but maybe the dollar value changes, right? So you need gasoline for your car. Write that down. You need a cell phone for the most part. Write that down. You need food, groceries. Write that down. Now, they might not always be the exact same price, but you still need them. So you're going to write those down, and then I want you to write down the wants, right? Like, what are you spending money on that you don't necessarily need, but you definitely want it? Right? Like it's, yeah, you know, I could get by without this, but I still really want it. I want you to write those down too. And then always leave room for the maybe pile, right? There's those ones that are like, oh, I can definitely get rid of those on a monthly basis. I don't need that. Oh, I have to keep these. But then there's that middle ground. Put a separate little pile, right? And if you just can't part with it, then throw it into the need pile. If you're like, you know what, it'd be better for me to get rid of this, get it out of there, okay? And I want you to do what works for you. Again, with the comment of the blinders, you got to do what's right with you, or do what's right for you. Don't worry about what everyone else is saying. Don't worry if someone says, you can't be buying that on a monthly basis. That's awful. You got to do what's right for you, okay? But be realistic with yourself. If you know that you're overspending in certain areas and it's not maybe that important to you, maybe that shouldn't be on your budget, okay? But again, you're going to track and reassess. So you're going to do all this. You're going to pull the 6 months. You're going to write down your needs versus wants versus maybes. A few weeks in or a few months in, you're going to go back and you're going to pull it again. Okay? And you want to see the improvements you've made. You want to see where you still need some touching up. And you're going to keep doing this every couple weeks, every couple months, whatever works for you. And then you reassess. You realign. You get yourself back on track. And again, ask for help. Professionals, people that know what they're doing around you, people that you trust. Okay? Never hurts to ask for help. Now, let's change gears here and talk a little bit about debt. And I know the pictures are great again. Don't ask me how I know. But I'm just finding some good ones on Google. Debt. How do we pay off our debt faster in a more strategic way by saving money and saving time? Well, here's some tips. And again, next week, I'm going to get a little bit more or a lot more in depth and talk about this at a deeper level. But for today, we can go with this. Debt. All right. My recommendation for people in debt is to pay off more than the minimum payment. All right. A lot of times I hear people just, if a credit card only charges you 4% on the debt you're carrying, people just pay that. That's not going to get you out of debt faster, and that's actually going to cost you a considerable amount of money. If you're paying 19.99% on a $10,000 debt and you're only paying off the minimum, you're going to end up paying a heck of a lot more than $10,000. Okay? That interest, it's compounding, right? So it is growing and growing and growing and growing. So not only are you paying interest on the $10,000, but you're paying for all of that. You're paying for all the unpaid interest as well. So more than the minimum payment will get you out of debt faster. If you have multiple lines of debt and you're kind of confused on which ones to go with, the easiest thing I always recommend for people is just to pay off the highest interest rate first, right? So you got the credit card at 19, maybe you got a credit card at 15, you got a line of credit at 7, and then you got your mortgage at 2. Go from the highest percentage first, okay? Why is that? Because they are costing you the most money, so you want to get them out of there as fast as you can. As you're planning your debt repayment, though, find out if you can move your debt. Now, what do I mean by this? There are certain, I guess, lines of debt or lines of credit that will allow you to do balance transfers, okay? Perfect example is a line of credit, right? It's basically a lump sum of cash that you have access to whenever you need it for a certain rate, 3 to 9%, give or take, usually. Maybe 2 to 9%, somewhere between there, depending on what kind of assets you own. But the point being is you can start paying off your higher interest debts like credit cards with your line of credit. For example, let's say you've got $10,000 in credit card debt and the credit card's at 19.99%. You can actually take that $10,000 out of a line of credit, pay off the credit card debt, and now your credit is only, or your debt is only costing you 5% on that line of credit instead of 19.99% on that credit card. So take a look and see if you can restructure your debt in a way that it's in a lower interest rate line of debt. Okay? Now, question I get all the time from my clients and just finance with Fergers too is, well, should I be saving or should I be paying off debt? Two answers. First, I always recommend to have a bit of an emergency fund. Okay, so 3 to 6 months of living expenses, that should be in a savings account somewhere. If you don't have that yet, along with paying off your debt, I think you need to prioritize paying off saving for an emergency fund. God forbid something happens, you do want to make sure that you can pay off. Make sure you can pay off your monthly expenses for a few months. Okay, but if you already have that, then you need to start prioritizing debt, because those high interest rate debts are really, really hurting you the longer that you have them. They're expensive, they're frustrating, they're time consuming. You can have them for months and years. You can have them for years. So once you've got your emergency fund, your money should be going to paying off your debt, not saving, in my opinion. Okay. Now on the flippity flop, what about debt versus investing? Should I be paying off my debt or should I be investing? This depends on which has the higher interest rate. Okay. Another example: credit card at 19.99 cents or percent, or an investment getting you 6%. Which one do you prioritize? Pay off the credit card, because you're paying 19.9% debt over here. I guess it'd be on the down, and then you're getting 6% over here. What you're doing is taking 1 step forward and 3 steps back. You will always end up back. Okay? But if your debt is 2.3%, like a mortgage, let's say, and you've got an investment getting you 6%, now you're taking 2 steps forward and 1 step back. So you are moving forward. So in that example, you would invest first. Well, you got to pay off your mortgage, but you wouldn't pay off more of your mortgage, or at least I wouldn't recommend it, right? Because you have the ability to make more money over here than it's costing you over here. So put your money where the interest rate is higher. Okay? Again, track and reassess. Take a look back, realign, make sure everything is going to plan before you get too far forward, and then again, ask for help. Professional, friends, family, somebody you trust. Don't do it alone if you don't feel comfortable. Okay? Now, some quick financial wins. I want to give you guys the opportunity to make some minor changes to potentially get some major results. And what I've done is I've related these around those 5 initial concepts that I spoke about at the beginning. The first, under earn, understand your paycheck. What can you do here to maybe save a couple bucks or get yourself a little bit forward? See if you can opt out, right? See if there are any deductions on your paycheck that you can actually opt out of. A common one that I see a lot with clients, doesn't mean we do it every time, but this is a common one that I see, life insurance, right? Sometimes work will charge their employees a little bit, not much usually, but a little bit for life insurance coverage. But if that client or if that employee already has a private life insurance policy, it might not make sense to still pay for it through work. So sometimes there are things on your paycheck that you're being deducted for that you can opt out of. Just see what's there and see what you can opt out of. Confirm commissions and expenses, and then hours and pay periods, kind of the same thing. Make sure you're getting paid what you are owed, right? Too often do we just show up to work and check out and get our paycheck and that's it. We don't actually look at what we're getting paid. Track your hours, track your commissions. You don't need to do this 24/7, but just do it for a stretch of 3 months. And if there are any errors, well, shoot, maybe you do need to start tracking more often because for some reason, you're not getting what you're owed. You cannot rely on other people to take care of you. You've got to look out for number one, okay? So confirm your commissions and your expenses and make sure that your hours and pay periods actually align, okay? A huge one. These ones are so misunderstood, and I would welcome anyone to please reach out to me after watching this video or after the session. If you want to talk about this and you have any questions, these are so awesome, and they are very heavily underutilized. Some workplaces will offer their employees an RRSP/DPSP match, basically, where if you contribute to the RRSP, your place of employment will also contribute some to an investment account for you as well. What this is free money, right? This is your employer saying, hey, we really want to keep you on. If you invest in your retirement, we'll invest in your retirement with you. So if you have one of these and you're taking advantage of it, awesome, you're doing great. If you have one, if your workplace offers one of these and you don't have this, I highly recommend you get one set up. I haven't crossed paths with a single person yet that it didn't make sense to get one of these set up. Okay, feel free to reach out to me if you have questions. Spend. Creating a personal budget. Again, we spoke about this a lot today. Just understand the ins and outs, right? Where's the money coming in? When's it coming in? How's it coming in? Where's it going out? How's it going out? When's it going out? Okay? Understand your bills, right? Again, like understanding your paycheck, understand how it's coming in, understand how it's going out. So look at your phone bills, look at your electricity bills, look at your gas bills. Make sure you're not being overcharged. Make sure that there aren't weird little fees in there that you can argue or you can get out of because maybe it was put there by accident or maybe they actually shouldn't be charging you. All this, you're probably getting that a lot of this just comes down to like paying attention and tracking, right? Just start paying attention, guys. You will find plenty of bucks to put back in your pocket, I promise you. Put everything on a good credit card, right? Put it on a credit card, then pay it off. Credit cards are great, as I mentioned on the previous slide. I have a phenomenal travel rewards card because I love traveling. So every dollar I spend that I can, I put it on this credit card and I'm getting points towards my vacation, towards my travel, free stuff, right? You can't get that with a debit card. The other thing you can't get with a debit card is security. If someone steals my debit card and goes out and pulls out cash, my money's gone. Someone steals my credit card, pulls out $1 million, that liability is on the credit card company, right? So get a credit card. It's more secure, it's more safe, and there's so many more perks. Get one that fits your lifestyle. There's cash back, there's travel, there's prizes, there's rewards, all kinds of good stuff. Find one that fits your lifestyle and use it. And then obviously pay it off, right? You don't want to be holding on to consumer debt. Take advantage of cool little plugins, right? Discounts and cash back, things like Honey, Rakuten, etc. I'm sure you guys know a lot of them. You seem like a frugal bunch, but these things are great, right? If you're going to be buying something, why not get some discounts for it anyway? Find out what is out there available for you in terms of cashback, in terms of couponing, in terms of things that don't require you. I mean, if you want to do more work, you can. But again, I'm trying to keep it simple for you. These things will just track when you press check out, they'll start looking for coupons. There are plenty of stuff out there. Recommend you go find them. Save. Determine your financial goals. This is probably one of the bigger ones, right? You got to get a plan. You got to determine what are you working towards, when do you want to get there by, and what are you willing to commit to make sure that you do. All right? Create that financial plan and stick to it. Just like your training routine, you're working out, just like your diet, just like anything that's worth putting in a little bit of work for, you usually start with a plan and you got to try to stick to it. Getting on top of your finances is no different. Okay? Maximize your investments. Way too often will we go to the bank, because that's where we typically go. Will we go to the bank and they'll just throw us into a mutual fund? We don't really know what's going on. We take a look at our investments and they're not doing so hot. See what else is out there. Not saying the banks are the worst. I think there's better out there. But pay attention to what your returns are. Take a look at your investments every once in a while, and if they're not getting you what you need to get to your financial goals, take a look around. There are a lot of options out there. Round up. This is kind of a cool one. There are apps out there where it will actually round up your spending for you. So for example, if you buy a coffee for $2.82, the app will charge you $3 and it'll actually invest that extra 18 cents. So over time, you're saving and investing without even realizing. There are things out there like that, so I'd recommend you take a look. And then this is a huge one. Auto deposits. Get it out of your bank account before it even gets in there, right? As you are getting your paycheck, the next day or even the day of, a percentage of it or a certain amount of it should be going into an investment account so that you can't even see it. You don't even have the opportunity to touch it, right? Money is like a bar of soap. The more you touch it, the less you're going to have. So don't even give yourself the opportunity to touch it. Get it out of there, okay? Now borrow, credit cards, loans, credit score. You guys know I like credit cards. You know what I love even more? Rewards cards. So I highly recommend you guys take advantage of it. Get a rewards card, one that's going to fit your lifestyle and give you the rewards you want. Because again, you're getting free trips, free flights, free toasters, free microwaves, whatever. Free. We all like free. So take advantage of it. I always recommend getting a line of credit. Now, some of you have probably had this where your bank reaches out, says you're pre-approved for a line of credit that you didn't actually apply for. So you're like, what the heck is this? I don't know if I should get it. Is it going to affect my credit? Most of the time, I'm going to recommend getting it. Why? Because it's a lump sum of cash there ready for you should you ever need it. Not that you should use it this way, but it could be an emergency fund, right? Maybe you haven't been able to save up that 3 to 6 months. At least you've got that line of credit there should you need it. It doesn't hurt your credit if you don't use it. It doesn't cost you anything. It's just sitting there. It's like an emergency fund. I wouldn't say use it as an emergency fund, but you can if you need it. They're great. Definitely recommend getting them. And then,
sorry, could you say that again?
Oh, Siri wants to hear it twice. You better check me out on YouTube. Balance transfers. Again, kind of what I spoke about on the debt page there. If you have an opportunity to pay for your debt at a lower interest rate by moving it to another place, highly recommend it. Do it. You will pay off your debt faster and it will cost you less money. And then finally, protect, right? Going back to that inspect and insure. Always go back every couple weeks, every couple months. Take a look at what you're doing. Are you staying on track? Are you doing what's necessary to get you where you want to be? And then insure, right? Look into insurance policies, life insurance, so that if you pass away, your family's taken care of. Critical illness or disability insurance, where if you get sick or if you get hurt and can't make an income, you are getting some money to help pay the bills, to help pay off the expenses. There's nothing worse than when you've been working your butt off to get your savings and investments growing. Something happens and you got to dip into that to pay for it. Why not see if there's something out there that can pay for it instead? Okay? And with that, guys, that is it. That is the end of episode 1 of season 3 of Finances with Ferg. Here is some of the contact information that I promised you earlier on. Feel free to text me, call me, email me, DM me if you have any questions. If you want to chat as well, love to do one-on-ones and actually get into the nitty-gritty of someone's situation. So feel free, guys. Would love to chat. Would love to pick your brain and let you pick mine and hopefully get you one step further. So thanks again, guys, and have a great night. Bye.